Hi there, welcome to Kneppy Invest. I had intended on doing a few standalone videos, short standalone videos. I'm talking about 4 minute long on a few companies that released interesting announcements during the week or were affected by interesting announcements. For example, I'm going to look at Resmed, CSL, and a company called Novo Nordisk, because Novo Nordisk is actually the biggest company in Europe right now by market cap because of one particular drug. And Resmed and CSL share price were affected by an announcement that Novo Nordisk actually released during the week. And for full disclosure purposes, I'm actually a shareholder of all three companies. So I was going to do a standalone video featuring all three companies together. I was also going to do a standalone video on Redbubble. They released fairly or possibly fairly important announcement. Share price rallied about 30%. Also, I was also going to do a standalone video on Tabcorp and also Bank of Queensland. But instead, I decided to roll all up these videos into the one video a week that was. So this will be a bit of a longer video, but if you're not really interested in any of the companies I want to speak about, or maybe just one or two, hopefully, if I remember, I'll leave one of those time thingies that you can just go straight to the company you want to hear about. Now, in the week that was, it's very important to have a look at the overall market. Now, it looked like the XGO was going to be up pretty big during the week, but we did have a down day on Friday. In fact, it was an up week. The first up week for about 4 weeks, and the XGO was actually up 1.4%, even though on the Friday, the XGO was down about 0.6%. It's not surprising we did see a little bit of weakness on the Friday. In fact, that weakness started on the Thursday, even though it was only up 0.04%, but we saw the Bulls and the Bears fighting each other on the Thursday, and it was a fairly even match. And then the Bears started to win on the Friday. And the reason why it's understandable is because of the nice rally in the XGO over the previous 5 or 6 trading days. And in fact, the XGO moved into a pretty good resistance area, which is the moving average, sort of the shorter term moving average ribbon, which does tend to be a natural resistance area. Now, the good thing is the XGO bounced out of a really good support zone. That support zone is between 6,900 and 7,000, and the XGO actually closed at 7,051. So it looks sort of similar to what we saw in March of 2023. You can see the XGO actually put into that support zone between 6,900 and 7,000, and then it tore higher for about 2 weeks. So we haven't seen the sort of reaction in the past week from the XGO, but the main reason is there's a little bit more bearishness in the market right now than there was back in March of 2023. But overall, you can't be bullish. You could be a little bit bearish, but you can't be bullish. And it's funny enough, I did listen to Ausbiz the Call, and there's one presenter who said we're in the bull market, which is absolutely ridiculous. We are not in a bull market right now. I won't say who that was. In fact, the person who said it, I actually highly respect. But I just think he's totally wrong when he suggests we're in the bull market right now. I don't know why he thinks that. Maybe he's the sort of person who doesn't look at charts at all. I don't know. Really, really weird for someone to say we're in a bull market right now. Because when you look at the XGO, definitely not a bull market. Now on to individual companies. And the first 3 companies I'm going to look at are Resmed, CSL, and Novo Nordisk. In fact, I was going to start with Resmed and CSL, but let's have a look at Novo Nordisk. Now, I am a shareholder of this company, and in fact, I bought shares on the Danish exchange. So now I have owned companies on, 1, 2, 3, 4, 5 different exchanges, and I hope to expand that over time. I bought shares in this company through my superannuation fund, which is through Net Wealth. I forget what it's called in Net Wealth, but you can buy companies on international exchanges. They do have a list of companies you can buy. You can't buy any company listed on international exchange, but you can buy the best quality companies. And definitely Novo Nordisk is one of the best quality companies, not only in Europe, but also the world. Market cap of this company is pretty big, almost 500 billion. No, that's wrong. It's also listed on the NASDAQ or the New York Stock Exchange, and hopefully they'll have a market cap. It should be about 500 billion, $449 billion. And when you look at the chart for this company, it's a beautiful uptrend. And there's one reason why this company has a beautiful uptrend. In fact, this is a perfect uptrend. In fact, the share price is now probably at a record high. even if you look at the weekly chart, beautiful uptrend over the past 8. Well, the uptrend just doesn't stop. Yeah, beautiful uptrend. And one of the reasons why this company is in an uptrend, you can see massive jumps in share price from week to week, is because of one particular drug, maybe 2 drugs. So there's a few articles I just want to point out here. And it was very important because this company did release an announcement during the week. This is the announcement that did cause a little bit of weakness, not only in CSL and Resmed, but other companies, particular companies that are dealing with kidney disease. And I'll show you another article, I think it's from Reuters, that will talk about how much the share prices of these other companies fell, not CSL, Resmed, but these other kidney diseases. So Novo Nordisk will stop the once-weekly injectable semaglutide kidney outcomes trial flow based on interim analysis. The reason they stopped it seems like because it was really good. The results look like they're going to be really, really good. And that's why there was a really positive reaction from the market. So this was the particular company's specific announcement, and there was quite a few articles about this. And here was one of those articles, Ozempic, which is their, I don't want to say weight loss drug, it's more a diabetes drug, and it is successful. Not only is it successful, it is selling like hotcakes. And in fact, they can't manufacture enough of this drug because the demand is so high. Just insane demand for this particular drug. And in this particular Reuters article, they're talking about how a few kidney disease companies' share price fell significantly. A company called DaVita blows down 17%, and another company called Fresenius Medical dropped 17.6%. Novo's announcement is the latest sign of disruption caused by the success of the GLP-1 drugs, which have hit shares of food companies, providers of bariatric surgery, and glucose monitoring device makers. So there is potential. GLP-1 drugs are used for the treatment of type 2 diabetes and for weight loss. Ideally, they should be used for type 2 diabetes, but it really works for weight loss. And there was another article here from CNBC, which really points out how much this drug is in demand. I want to point or just talk about a few paragraphs here. So this drug has been sold since, has been on the market since 2018. Novo Nordisk net sales were 111.8 billion Danish kroner, or 17.7 billion US dollars, using an average exchange rate at the time. In the last, this is the most important paragraph, in the last 3 months of 2022, US healthcare providers wrote more than 9 million prescriptions for Ozempic, Wegovy, and other diabetes and obesity drugs. And Ozempic accounted for more than 65% of total prescriptions as at the end of 2022, and it was only up from there. In the first 6 months of 2023, sales of Ozempic and Wegovy rose by 58 and 363% respectively. So there's a lot of demand out there. Now, I'm not the biggest fan of this particular drug to deal with obesity, and there's reasons behind that. I think there are better ways to deal with that, but this video is not me ranting about best way to lose weight, but it seems like it is a very popular drug for weight loss, and that's what I'm going to say about it. And this is why the share price of CSL and Resmed were affected during the week. In fact, on one day, the share price of both companies fell significantly. Let's have a look at Resmed. Now, Resmed share price has been affected by these particular drugs for a while now, because they believe if everyone's going to be using these drugs to lose weight, no one would need Resmed ever again, which I think is the market overreacting a little bit. Now, this is the weekly chart for Resmed, and you can just see what's been happening to share price over the past month, 2 months. It's been on a downward trend. There was one good week in there, but otherwise a downward trend. And on the daily chart, it looks pretty ugly. However, in saying that, there is real potential that the market is significantly overreacting. I would even say that the PE ratio of Resmed might be the lowest it's been for many, many years. I'm going to have a look at that now. So I'm going to use Guru Focused, and I'm going to show you what I do to get the historical PE ratio of a company. Interactive charts. One interactive charts, Guru Focus, and you have a lot of options here. It goes straight to price, but I want to see PE ratio. So you can use any sort of time period as well. I've got 1 year, 1.5 years, 3 years, 5 years. I don't really want to look at 20 years so let's have a look at the last 10 years. PE ratio of Resmed over the past 20 years. Now, back in 2014, we'll go back 15 years to not COVID-19, the GFC. So if we go look at a period between 2009 and 2014, the P ratio of Resmed on occasion did drop below 20. So if you bought Resmed at a P ratio of less than 20, you probably did really good. But you can see fairly strong multiple expansion from about 2015 drove the P ratio of this company from 20 to a high of more than 90, which is absolutely ridiculous. And right now, the P ratio of this company is 23.67, which is just above that low point over the past 15 years. So this company is becoming attractively valued, and that's one of the reasons why I think the market is slightly overreacting about the impacts of this Ozempic drug and these other weight loss drugs that might have. And I think the effects won't be as significant as what the market might think right now. Now, there's another reason why Resmed shares did fall, and that was because of a decrease in margins. That was the initial shock, and it's just shocks keep coming. And the share price now at 21.54. Last time the share price was this low was probably during the COVID-19 financial panic. Yep. So for a short period of time, the share price of Resmed did fall to these levels. But if you take that away, the last time the share price was this low was actually back in 2019. So we're talking about a 4-year low in Resmed's share price. And even though it's a 4-year low in the share price, P ratio is like 24.48, according to Trading View. Companies has still portraying showing nice growth. So revenue is growing nicely, not as quick as probably what you would like, but still growing nicely. And there has been a decrease in profit margins, which did cause a little bit of a concern in the market, which is why the share price did plunge initially. Now to CSL. Now, the other thing is I don't understand. So let's go back to Resmed. So the share price of this company fell 5.26% on the Thursday after the announcement from Novo Nordisk and fell a further 2.8% on the Friday. And that's because of overall weakness in the market. I'm not sure why Resmed share price was affected because they don't do anything with kidney disease or anything like that. Unlike CSL, I'm pretty sure CSL's or one of their division does deal with this part, diabetes, that sort of thing. Not the main business of CSL, but still, CSL share price was hit hard on Thursday, down 6.3%. A nice little rebound on the Friday. We saw the share price rebound 1.3%. And you can see this line I have about $240. That $240 is a really strong and significant, maybe not strong, but definitely significant support level. And the very fact we did see a nice little rebound in the share price over the past 24 hours. You can see that when we look maybe at the 5-minute chart. Well, a lot of selling in the first, say, 10 minutes of trading on Friday. Share price went to its lower, and then a lot of buying coming in after that. So a little bit of panic on open on Friday, which is typical. This is retail investors panicking, and there is a saying that amateurs open the market and professionals close it. And this is a perfect example why sometimes you don't want to make a decision on open. Now, you might argue that the previous day, that's when you wanted to make a decision because the share price fell consistently through the day. But I find on days like this, when there is or has been overreaction from the market, potential overreaction from the market, you don't want to overreact upon opening of trading the next day. And this is a good example of that. So if we do go back to the weekly chart, so I have this sort of this strong support level or significant support level at $240 because ever since 2019 share price, whenever it falls below $250, sort of in between 250, 240, we see some good buying. It's done it three times in the past, back during the COVID-19 financial panic, again in early 2021 and then early 2022. So maybe there's a bit of seasonality there. Early 2021, early 2022, although early 2023, there was not that low point. So right now could be a good time to buy CSL shares. Now, the PE ratio of this company is still high, I think about 34.5. So if we compare, I'm going to do the same thing as I did with Resmed. If we just have a look at historical PE ratio for this company, doing the same thing as what I did with Resmed, do we see any value with CSL right now? Why don't we go back 15 years so we get rid of these peaks? So funny enough, back in 2010 through to 2012, you could have bought CSL at a P ratio of 15. In fact, lower than 15 during 2010. You could have bought this company at a P ratio of 14. And you can see the PE ratio of this company consistently climbing since then. Well, from then until COVID-19 financial panic. So when you see a PE ratio climbing through time, that means there is multiple expansion, which means that the market is more and more willing to pay a premium for a company. And that is definitely true for CSL. How many times have I heard over the past few years people say, well, you always have to pay a premium for this company because the PE ratio is always high? That's not true. It's only been really high for the past, we'll say, 8 years or so, because if you go prior to 2016, the PE ratio of this company was below 30. And again, if you go prior to 2013, the PE ratio of this company was lower than 20 after the GFC. So the PE ratio of this company, we'll say, is around 35 right now, which is not on the low side, not like Resmed. And there is a future where the PE ratio of this company falls even further from here. So, and I could see the PE ratio getting back below 20 if something significant happens with the market. So even though this is a premium company on the ASX, even premium companies can be sold off. So at this point in time, I wouldn't say CSL is overly cheap. Now, if you just compare the PE ratio right now to the last 5 or so years, it's on the lower range. In 2021, remember that share price fell significantly in the first few months of 2021. PE ratio of this company fell to about 31, 32. So if it did fall below 30, you might be able to argue this is starting to look cheap, particularly if they can continue to grow from here. This is a growth company, in my opinion. It's not a mature company with no growth like the banks. You are going to get growth out of this company over the next 5 to 10, 15 or so years, unless a competitor comes on the market with a much better way of doing things, just improving the way of doing things. There is that potential. There's always that potential for every single company that is out there. There's always that risk. And then did I show you Novo Nordisk? Yeah, Novo Nordisk. That's a screaming, I wouldn't say a screaming buy, but the chart is absolutely beautiful. Probably the only thing you might say negatively about Novo Nordisk is the share price has really run up since August, and the time to buy when you ever see these dips. So if I saw the share price dip towards this blue line, which is the 150-day moving average, and that green envelope is the longer term moving average. And if I see the share price move into that longer term moving average, that's when I would add to my position. But at this point in time, a lot of positive sentiment behind Novo Nordisk. Hands up who had never heard of this company before the last few months. There's a few, actually, there are a few drug companies out there that most people have never heard of. The other one was Eli Lilly. Who's heard of this company? Probably can't even spell it. Eli Lilly and Company. I'm not even sure I can pronounce it right. Who's heard of this company? Look, the chart looks beautiful as well. Market cap of this company is almost 600 billion. Yeah, that's right, 600 billion. Annual sales of $28.5 billion in 2022. I don't even know what they sell. I can't even tell you what they sell. Diabetes, oncology, immunology, neuroscience, and other products and therapy. The company was founded by Eli Lilly in May 1876, headquartered in Indianapolis, Indiana, which is the capital of Indiana. Funny enough, I am sweating because it is quite warm in this room, even though I've got the fan on. Anyway, that's all I have about Resmed, CSL, and Novo Nordisk. Novo Nordisk is one of the international companies I hold in my portfolio. Now on to some other companies on the ASX, starting with Tombador, which, funny enough, reminds me of Lord of the Rings. For those who have read the books, maybe you can understand why Tombador reminds me of Lord of the Rings, particularly the first book, because there was one character in the first book that was not featured in the movies. Anyway, Tombador had a bad week. There is nothing you could say to sway me to think otherwise. Now, they released 2 announcements that caused the share price to suffer. Okay, so let's have a look at the announcements of Tombador during the week. On the 3rd of October, actually, that was 1 week ago. So on the 3rd of October, so we're talking about the last 2 weeks. So the first negative announcement was an operational update on the 3rd of October. And this was really negative. I remember reading this and going, oh, it's not good. Some of the words they use, update on production. So some of the words they used here, project experienced constrained production. So straight away, negative language. The production constraints are due to previously announced unexpected geotechnical event, cutback operations, and additional geotechnical work and safety measures, which result in shallower pit slopes, blah, blah, blah. So straight away, this is a negative announcement, and the share price dropped 33% on the 3rd of October, which was also a long-term low, maybe an all-time low for this company. Yep. Anyway, and then to make matters worse, the company went to a trading halt on the 9th, which is the Monday, and then they went to suspension. The shares went to suspension, and then funnily enough, on the 11th of October, they announced that operations have gone to suspension, which is not a good sign for shareholders. You don't want operations to go into suspension. So they have cut or suspended mining operations at their project for a few reasons: safety and geotechnical concerns, market conditions, which is interesting. I'm pretty sure this is an iron ore company, and resource conservation. So not a good thing for look for Tombador shares. Have they been trading? No. So last time shares traded was on the Monday, and there is potential shares of this company or the share price could fall significantly. You can see on the 3rd of October, the share price fell 36.8%. I thought it was 33%. And then the next day, share price rallied 25%. So a little bit of volatility, a lot of volume coming in on that, the 3rd of October, 12.9 million shares traded. So some people thought that was a bit of an overreaction for the market, but unfortunately, share price could fall even further from here. Pretty high volume on that day when you look at the volume for previous days. I always look at volume. Volume is very important. You can get a sense of what the market is thinking just by looking at volume. So that's Tombador. Now it's a Perpetual. So I'm going to do a standalone video on this one coming up. Financial year 23 video, which was a suggestion from a viewer of this channel. And in fact, we're going to do a video on Alcidian and then Perpetual. So I do know a little bit about this company because I have already set up this company. And it is, I wouldn't say interesting. It's not the sort of company I would invest in. Now, I did feature this company in a recent video, a technical video, because of where the share price is right now, a very important support level. That support level is around about $20. The reason that level is very important, because if you look at the weekly chart and just zoom out a little bit, you'll see that the last time the share price went below $20 was very, very briefly during the COVID-19 financial panic. When I say briefly, maybe for like 5 minutes. But the last time share price fell below $20 was way back in 2011. So we're talking about 12 years ago. Share price has been as high as $58 in 2015. So I wouldn't, just by looking at this chart, I would not classify Perpetual Limited as a high quality company at all. This is not the chart of a high quality company. That's the main takeaway. This company has also made an acquisition of Pendle. I'm pretty sure this company is like a fund manager. That's the best way to describe them. A financial services group, fund manager, wealth advice, financial advice company. We'll call it that. Financial advice company. So why am I discussing Perpetual in today's video? Because they did release an announcement, a very important announcement in my opinion. A first quarter financial year 24 business update. These are the sort of announcements I'm looking for every single trading day. I want updates from the company. Sometimes you'll see really good updates that are unexpected and the share price will rebound pretty strongly. So this was a good announcement from the company, and that's why the share price actually rose 2.6% when the overall market was down. Some good positive language in here from their CEO and Managing Director, Rob Adams. He said the September quarter showed a marked improvement in total net flows across our asset management business when compared to the June quarter. So things maybe have turned around for this company, potentially. And maybe there is value in Perpetual right now where the share price is. And if this is a turnaround story, potential value. So this would just be a trading opportunity in my opinion. But chart looks pretty bad. When you do look at the weekly chart, daily chart probably will look pretty bad as well. Share price in a well-defined downtrend, but potentially, just potentially, $20 is a nice floor in the share price. And the current share price of Perpetual is $21.31. Now on to, actually, I'm going to have an ad right now. So stick with me, get a cup of coffee as you watch this ad. Welcome back. And the next company I want to talk about is Vmoto. They produce little bikes, not bikes, cycle bikes, motorbikes, that sort of thing. I'm pretty sure they do. I've never been interested in this company, but someone did ask me to do a video on Vmoto because they were showing some good financial success. This was a few years ago, but I haven't really been following this company all too closely. I'll show you the chart in a second, but a pretty bad week for Vmoto. They released a market update on the Monday, and it was not a good market update. And we know without even looking at the announcement, just look at the trade history of this company, share price fell 16% on the Monday. So let's have a look at this particular trading update if it opens up. So, 4,937 units sold, down 58%. International unit sales down at 65%. Positive operational cash flows. That's okay. I think they've been operating cash flow positive for a while now, but you don't want to see sales going down. So I think that's the main reason why. There could be some reasons why sales were down. And here's a nice photo of what they sell. It's pretty low. I wouldn't say low quality bikes, but the sort of bikes where you only want to pay a few $1,000s for, particularly useful in maybe Southeast Asia, those sort of companies. And here is an international sales units, 2021, 2022, 2023, and going by quarter. So we do see a significant decrease in sales in 2023. Maybe that's because of increasing interest rates. I don't know. But the main thing is the market didn't like it. And the second negative thing through the week is the company decided to do a capital raising $10.8 million. I haven't actually had a look at this particular capital raising. Now, since the share price did drop 9% or 1.5 cents to 15 cents, makes me think the capital raising was done at a price at around 15 cents, maybe 14 cents, something like that. It all depends on the sentiment of this particular announcement. Yeah, so an issue price of 15 cents. It probably is understandable why the share price fell to 15 cents. So capital raising, a negative market update, and when you look at the chart, it looks really negative. This is the daily chart. Share price has fallen a fair bit over the past year. In fact, in August last year, the share price of this company was 45 cents. Now it's 15 cents, so it's dropped 67% in a short period of time. And that's a fairly strong downtrend right now, increasing volume over the last 4 or 5 days because of these announcements, which is not necessarily a good thing. The time to really sell this company was back on the 8th of May, when the share price dropped 14.7% on this day here. On the back of share price moving into a downtrend, the company must have released a really negative announcement, and that was the time to sell. And in fact, if I was owning this company, I would have sold on that day or the next few days because share price has continued to fall since then. If we do look at the weekly chart, there was a time this company was favored, yeah. So back in 2020, the share price zoomed significantly higher, even really after COVID-19. Just before COVID-19, the share price was zooming higher as well. Look at that share price just taking off. In fact, it went from 15 cents to a high of 67.5 cents in a fairly short period of time. The share price has been struggling since then. Next company I want to look at is a company I have never heard of before, and that company is Aeris Resources. And let's have a look at the announcement and see if we know what this company does just by looking at the announcement on the 9th of October. Reason why I want to include this company is because the share price rallied 63.6% on the Monday, the 9th of October. It rose another 11% on the Tuesday, fell 10% on the Wednesday, up 5.6% on the Thursday, and then up a further 21% on the Friday on huge volume. So when I say huge volume, 121 million shares traded on the Monday. The previous day, only 900,000 shares traded. In fact, a few weeks ago, there was only 13,000 shares traded on a single day. That was the 26th of September. So a massive increase in liquidity because of this particular announcement from the company. And the announcement that drove the excitement is, of course, something to do with lithium. Large spodumene crystals discovered in pegmatite outcrop. There's too many lithium companies on the market right now. In fact, quite a few companies I'm following have transitioned from gold explorer to lithium. It's just ridiculous what's happening right now. And even announcements like this is causing excitement in the market, even though lithium prices have fallen like a rock. And here's a chart. So even though lithium prices have fallen, just like we see in the chart here, maybe not as long as this, Aeris Resources share price has fallen from 5.2 cents to a low of 1 cent, and the share price has rallied. But the most important thing about this little rally in the share price, not only is a really large volume, so the market has just become interested in this company, is the share price has broken out. This, I believe, is a breakout, particularly what happened on the last trading day on the Friday. This was maybe confirmation of the breakout in Resources. Market cap of this company, 11.8 million, so not too stretched. So I probably would put this onto my everyday watch list. So I have an everyday watch list. So after trading every day, I will go to this everyday watch list and just go through the charts for all these companies. So potential breakout for Resources. Not my sort of company, but I just want to follow it to see what happens with the chart moving forward. Now, one of the things I always look at or look for is profit upgrades. It's the most powerful type of announcement, and a company called RPM Global did exactly that. This company released a profit upgrade last week on the 3rd of October. First quarter financial year 24 business update. They should have titled it profit upgrade, because this is what it was. So this typically is the most powerful type of announcement a company can release. And the reason that is because the company is performing better than expectations. And typically when a company is performing better than expectations, the analysis have to increase or change how they value a company. And typically when they change how they value the company with these higher than expected numbers, typically the output share price is significantly higher than before. So this was a profit upgrade. So let's see if I can remember. It's fairly long. Okay, so down here, should have highlighted here. It looks great. So total revenue is projected now to be in the range of 107 to 112 million. Previously, it was 105 to 110 million. Financial year 23, 98.4 million. Underlying EBITDA now projected to be between 18.5 and 20.5. Previously, it was expected to be between 17.5 and 19.5. And profit before tax now to be projected to be between 13.5 and 15. Previously, it was 12.5 to 14. So this is the very definition of a profit upgrade. And typically, when you see a profit upgrade, the share price should rally. But in this case, it didn't. Now, when the company did release this particular announcement on the day, there was a nice little rally, initial rally. Share price popped up to about $1.56.5, but then pulled back. Selling came in. The main reason selling came in is because if you go back to July and August, share price was higher. So those shareholders or people who bought in shares of this company July, August, saw the share price decrease after they bought and thought straight away, this company is a dog stock. Share price is dropping. It's a dog stock. This is a terrible company. Share price should rise as soon as I buy in. And so when they see this announcement and the share price rallying up to $1.56, they see the opportunity to sell out of this dog stock. And that selling overwhelms the demand. Not really high volume on that day either. So really surprised to see the lack of interest in the market when a company released a profit upgrade. Typically, in a normal market, when a company releases a profit upgrade, share price should rally. Now, you might argue maybe the market had already expectations that there was going to be a profit upgrade. That was definitely true. Or maybe some people expected a higher profit upgrade. That's also potentially true. Or maybe people were just seeing the market cap of this company, 328 million, and think this company is just overvalued. But that was one little surprise I found, that sometimes the market doesn't react or act the way you expect it to. Cleanspace. Let's have a look at the weekly chart for Cleanspace. Wow. So, first time I've ever tried raspberry Coca-Cola. Went for a long run this morning. I typically drink chocolate milk and Pepsi Max after a long run. They had no Pepsi Max, so I decided to try Coca Raspberry. Actually, don't mind it. Anyway, back to Cleanspace. Sorry about that side talking thingy, whatever you want to call it. This has been a disaster. Sort of. They probably listed in the ASX at the best time in terms of the company itself getting a lot of money to do what they wanted to do, but for shareholders, it's been the worst time. Share price of this company went as high as about $7.50 in the first week of 2021. Share price of this company is now 28 cents, market cap $20 million. Share price in a well-defined downtrend. Look at the daily chart, share price just keeps on dropping. Whenever share price goes into this, see this red zone, which is the longer-term moving average. I see this blue line, which is 150-day moving average. When the share price gets to that point, you can see it's happened twice in the past, or maybe you can say 3 times, the share price pulls back. The reason that happens, just like RPM Global, because the share price has been dropping and dropping and dropping, well-defined downtrend. Whenever the share price rallies, you have all these shareholders who want to sell out. So you see an increase in supply of shares on the market. So when you see a rally in the share price, it needs to be strong. You need to see a lot of demand. And the only way you're going to have a lot of demand for shares is if the announcement is really powerful, a really good financial announcement. And I thought maybe, just maybe, Cleanspace did that. So they did release an update during the week. So financial year 24 update. I had a quick look at this. They released it on the Monday. For some reason, all these companies released their really important announcement on the Monday. And on the Monday, the share price of this company actually went up 10%. At one point, the share price of this company was up 20%. But then you see the selling coming in the next 2 days, down 9% on the 10th, which is the Tuesday, down 11.7% on the Thursday, no trading on the Wednesday, and up 5.7% on the Friday on only 400 shares traded. So there is a bit of a liquidity problem with Cleanspace. But let's have a look at this particular announcement. And there is an argument to say Cleanspace is starting to turn things around. So quarter one sales, $4 million, up 52% versus the previous corresponding period, and up 18% versus quarter four. Cash at bank, 11.6 million, down a little bit from 30th of June 2023, which was 12.2 million. Industrial sales up 69%. Europe sales up 81%. APAC sales up 33%. North America sales up 7%. 53% of sales were from respiratory units. The company does not expect to need to raise capital to fund current operations. And the CEO states quarter one sales were driven by the focus on our 6 priority countries, ongoing rollout of upgraded models, Ultra and Pro, and improved sales execution with our distribution partners, including new distributors in those markets. So this does seem like a positive step in the right direction for this company. So I have decided to put Cleanspace onto my everyday watch list because this could be the first sign of this company turn things around. Now, you can just see the share price, the chart. I've already shown the chart, and the reaction from the market was fairly volatile, but there was an initial good reaction from the market. The only thing I would like to see is some higher volume coming in. We don't see really big volume. So there's been some massive volume spikes, and there was some really good sustained volume in June, and that was towards the bottom of the market. You sometimes see this. You sometimes see an increase in volume when the share price reaches a low because people see value, and increasing people see value. And that's actually a good sign when you see an increase or spike in volume when the share price has reached its bottom. Now, in hindsight, you can say that, but in this case, it's true. The volume actually did increase when the share price reached its bottom. And you had a few days to react to that. So the share price started to turn a few days after the volume dried up. Now to a company that actually has been a horrible performer recently, but another possible turnaround story. Let's have a look at the trade history for Aeris Resources in the past week. So on the Monday, up 12%, up 8% on Tuesday, up 20% on Wednesday, down 10% on Thursday, and then flat on Friday. So what happened on Monday? Again, another company that released something on the Monday. So September quarter preliminary production results. So just by the reaction from the market, this must have been good. We know that because the share price was up 12% and kept on rallying the next few days. So Triton, Krakow, and Mount Colin all met quarterly production targets. Jaguar production exceeded guidance and site now on care and maintenance. So, and then the executive chairman, Andre Labuschagne, said, we are very pleased that all operations are performing to plan. A particular mention goes to the team of Jaguar that safely delivered an excellent final quarter of production. So this was a good update from the company, and that's why the share price has rallied. Unfortunately, when you do look at the chart, this is an ugly looking chart. Share price has fallen a lot, still on a downtrend, and this rally in the share price is not a breakout because the share price has dropped a lot over the past, we'll say 6 to 9. So the share price reached a high in February. It's October now. So share price has been dropping the last 8 months, we'll say. So not a breakout in share price. I wouldn't be surprised to see a share price go back to about 16 to 17 cents. But a good update from the company. This is what you want to see. You want to see this company releasing more good updates. And if they can keep releasing more good updates, more than likely the bottom has been reached in the share price. Markup of this company is around about 150, so not too stretched. Advanced Zinctek Limited. Well, look at the chart. Looks pretty ugly. I know this company simply because I was an investor of this company way back here. Way back in 2016. Share price rallied. See this nice little rally in the share price here back in August 2007. I sold. I went, oh yeah, I'll take profits of this company. It wasn't 48 cents because they did what do you call it? So the recapitalization of shares. What do they call that? And then I just watched the share price go up and up. Share price went from 48 cents to $7.75. I thought I was a genius selling, taking profits. Not so, and now the share price is struggling. And is down now less than $1. So if you take the longer term view, maybe I sold at the right time. But I could have sold right now at a higher price. Anyway, enough about me and my silly mistakes in the past. You always have to make mistakes. It is true on everything in life. Advanced Zinctek wasn't called Advanced Zinctek when I bought. It was called something else, but I forget. Now, this company has been releasing some bad stuff. So we can see share price dropped 17% on the 10th, which is a Tuesday. So what happened on the 10th? So on the 9th of October at 5:32 p.m., there was a chair's presentation to shareholders. So there must have been something negative in this particular announcement because the next day, share price dropped a lot. So the current half sales flat. So let's have a look. Gross margins flat. Profit down. Statutory profits down. Adjusted results up a little bit. Revenue up a little bit. Current assets. Not seeing something really obvious to cause a significant reaction from the market. Maybe there was some sort of outlook here that could have been negative. Anyway, there was something negative in here that the market didn't like. And then lo and behold, intention to make takeover bid on the 11th. The following day, there was a takeover bid for this company. So this is a weird takeover bid. So Advanced Zinctek announces that it has been advised by entities owned by Mr. Lev Vysokovsky that intends to make a cash off-market takeover offer up to 11.2 million shares in Advanced Zinctek, approximately 7% of all ANO shares on issue for 97 cents per share. So just by that, it doesn't look like it's a complete takeover. This announcement is subsequent to receipt of a non-binding indicative proposal that was received by Advanced Zinctek from the Vysokovsky Group today. So that's 70% of shares they don't own. So Vysokovsky Group has a relevant interest in approximately 51.6% shares. No. So then have clarification of previous announcement. Well, I need a lot of clarification. I'm a little bit confused by that announcement. Okay, so clarification. In its early announcement on 11th of October, advised entities owned by it says my leave. It probably should be Mr. Lev Vysokovsky, intended to make a cash off-market takeover offer for ANO shares. The Vysokovsky Group has clarified that its offer is in respect of all ANO shares, Advanced Zinctek shares. However, its preference is that you only require up to 11.2 million shares. All right, so it's still a little bit confusing. So they don't mind not buying all the shares. So it's not complete takeover looking at this. It's only a small takeover of. So they want to increase their shareholding from 51.6% to 70%. Oh, I don't know if this really needed an announcement, to be honest with you. It is a little bit confusing. It seems like the first announcement, that's what they were saying, but then they want to buy all the shares, but they don't mind if they don't buy all the shares. Very confusing from this. Anyway, I probably can see why. I do think there's value. This company has a market cap of 58 million now, and I think there is value in this company. Share price has dropped a lot. This company share price dropped 26% on the 30th of August, which was probably the half-year results or full-year results, and then a further 26% the next day. So share price dropped from $1.46 to 81 cents in 2 days. That's a significant drop in share price. And the share price has just gone sideways since then. So I can see why that Midikovsky group sees some value in this company right now. They want to take advantage of possible value. And they probably know this company way more than I do because they already own a significant amount. But confusing announcements from Advanced Zinctek and that Midikovsky group. Coventry Group. I'm going to do a video on this company, a financial year 23 result video. This company also released a trading update. Nothing, I'm going to say this, I did have a look at this trading update because there's a trading update. I look at all trading updates and nothing to be concerned about. So they have 3 segments, fluid systems, or two segments, fluid systems and trade distribution. Sales up 10.8% in fluid systems, up 3.1% in trade distribution. Sales for the group up 6.1%, unaudited EBITDA up 10.8%. Seems like things are moving in the right direction for this company. The outlook, sounds okay. Nothing too significant here. They do mention, given continuing market uncertainty, we will not be providing financial year 24 guidance, but that's fairly typical in the current environment. In fact, it's been fairly typical over the past few years, but things are moving in the right direction for this company. So the market, though, doesn't really, it's a ho-hum. And in fact, the market cap of this company is currently $100 million. This company had $358 million of revenue last year, $322 million the previous year, but the margins in this company are really small, really, really small, which is the one negative thing about this company. And if you look at the weekly chart, this is not sort of the weekly chart of a high quality company. So this goes back to 2013. So back in 2013-14, share price of this company was significantly higher. And then this company went through some problems between 2014, 2017. If you can buy shares in this company about 50 cents, that does seem to be the floor. And current share price is $1. So not a high quality company, low margins, but they're selling more and more. Sales are up, EBITDA's up. So it's not a bad announcement from Coventry Group. Now it's a Redbubble. This was a positive announcement without doubt, and you saw that in the market. I'm not the biggest fan of this company. A number of reasons why. I did go to the website once, and I just found everything way too expensive. That's maybe just me. And this is the sort of title you want to see. So if a company releases a profit upgrade, call it a profit upgrade in the title. So Redbubble just said, we want to announce that we have returned to being positive underlying cash flow, or underlying cash flow positive. And so you straight away know that this is a positive announcement. So Redbubble returns to positive underlying cash flow. And that's all she wrote. That's probably all you have to know. Positive underlying cash flow of 0.7 million, up 16.9 million. Cash balance of 39.9 million, up 4.2 million. That's all you have to know, really. And the market liked it. However, even though the market liked it, there is one problem. Well, apart from this Matterhorn pattern, when the hype got a little bit too much for the company, but if we look at the daily chart, there's one small problem. We saw a little bit of excitement coming to this company late July into August. Set this nice little rally in the share price. Share price of this company went from 30 cents to a high of about 73.5 cents in a fairly short period of time. Not a high volume. Now, if we didn't see this rally to this announcement from the company, would be a breakout. We see that. Just imagine the share price of the chart, or the individual daily candlesticks went like this, and you didn't see a peak, or maybe the share price or the chart or the share price just went sideways like this and up a little bit, and they released this announcement. Share price increased 30% on the day, down a little bit the next day. Actually, says it's flat the next day. And if we didn't have the share price higher back in July and August, this would have been the definition of a breakout. The reason why I'm hesitant about Redbubble is because of shareholders who bought it at higher prices back in July and August, who now think this is a dog stock because the share price fell. and they saw the opportunity to sell out the last few days. Now, here's a little twist on that little argument. If all those shareholders who wanted to sell out because they bought in July and August, the share price fell, potentially they've already sold out. They've all sold their shares. There was enough demand that they were able to sell their shares, and we might see Redbubble's share price rally from here. And if the share price gets above 75 cents, that would be a good sign that there's not much more resistance moving forward. So I've decided to put Redbubble onto my everyday watch list just to see what happens with the share price over the next few days. Tabcorp, a company I've never owned, more than likely will never own, but this company also released an update on the 12th of October. This was a negative update. I actually did look at this. So even though it's a company I'll never own, more than likely never own, I still have a look at the announcement just because you never know. It could be a really good announcement and it could surprise you. You go, well, I'll never own this company. Now I've changed my mind. But this was not a positive announcement or update. Group revenue down 6%. In fact, everything's down except one. Digital wagering turnover up 1%. Everything else is down. And funnily enough, the CEO, he actually mentioned that one little thing that was up 1%. He actually focused on that. So this is what the CEO said, Adam, or I'm not even trying to pronounce his last name, Rittenskilled. Adam Rittenskilled. This is what he said. Given the softer trading environment, I am pleased we grew digital wagering turnover by 1%. So it's just really interesting that the CEO focused on the positives, which is probably what they should do, focus on the positives. He had a little bit of negative sentiment in there with that given softer trading environment, but it was a positive spin by the CEO that he focused on the one thing that was up during the quarter. But understandably, the share price dropped. Okay, come on. And in fact, let's have a look at the weekly chart first. Even if you look at the weekly chart, and now Tabcorp did spin out the lottery group, so you have to take that into account. But when you look at the weekly chart, this now over time, share price has been increasing very, very slowly. What's the dividend yield of this company? 2.5%. Dividend yield's 2.5%. You'd want much higher than 2.5% for a company that's not growing all that much and more than likely won't grow all that much. So yeah, I'm not interested in this company for many reasons. And when you look at the daily chart, it looks pretty ugly. In fact, the share price. So what I'll do is just put a line there. The two lows we saw back in May 2022, October 2022. In fact, we have a look at the weekly chart and see that. In fact, you can even take it back further. So it looks like around about 90 cents is a really good, powerful, strong, important support level for this company. And actually understandable. We actually saw the share price bounce on that day. Share price went as low as 86 cents. And we did see some buying. So let's have a look at the 5-minute chart just to really emphasize that. So when the share price or the trading opened for this company, again, the market panicked on open. Again, more than likely, this is retail investors. In the first 10 minutes of trading, share price dropped to 86 cents, massive volume coming in, and the share price rallied over the next 10 minutes. So the share price went above 90 cents at about 9:25 a.m., fell below 90 cents for a very brief period on open the next day on the Friday. Share price just going sideways. So maybe the share price has hit a floor. But again, I'm not that interested in this company at all. Now, that's not like this other company, Bank of Queensland. I know actually quite a few people who are interested in this company because I think there is some good value. Unfortunately, the company did release their financial year 23 results on the 11th, which was Wednesday. On the 11th, I have not even had a look at these announcements. I'm going to leave that for a few weeks, but I don't need to know what happened or what. I don't need to have a look at the have a look at the results to know they were not up to expectations. Why do I know that? Just look. Let's have a look at the chart. Actually, let's have a look at the trade history first. So on the 11th, when they released the financial year results, the share price dropped 7.4%. Nice little rally the next day, 3.9%, then dropped a further 1.8% on the Friday. But since the share price dropped 7.4% the day they release the results, just tells me straight away the results were not up to expectations. Don't even have to have a look at the announcements of the results just yet. Let's have a look at the chart. And this is where it becomes really interesting. So the share price back in May and June fell to, we'll say about $5.30 and then rebounded. And the share price has rallied off $5.30 the last few trading days. So it looks like, if we have a look at the 5-minute chart again, yeah, the share price rallied almost right on that a support zone or support price. Now, typically a support price is a zone. That's the way I look at it. One single price is not set in stone. It's a zone. And maybe $5.30 is a floor for Bank of Queensland, potentially. So share price got as low as $4.50 in April 2020. But if we maybe have a look at the monthly chart, I have held this company in the past. I held this company back in 2011 when you saw this massive dip in the share price. So I held this company when the share price was $6.50, and then I sold. This is not a long-term hold. And you can see why. The share price had a high in November 2007 of $17.50. Current share price, $5.46. This is not the chart of a high-quality company. This is actually the chart of a high-quality company. This is not the chart of a high-quality company. So probably the big question is there any value in this company? I'm going to do the same thing. No, don't know if this is going to work. They probably don't have the results just yet. I'm going to look at price book ratio. Okay, so this is over the last 20 years. Before the GFC, the price book rate, the PB ratio of this company was between about 1.75 and 2.75. So really, it seems like the GFC affected this company. And then since then, the PB or price book ratio of this company has been between 1.5 and 0.5. The price book ratio of this company is 0.57 right now. You can see that if we look at the last 10 years. During the COVID-19 financial panic, the PB ratio fell to 0.5. Now it's right at that point. But you can see over the past 10 years, the PB ratio of this company has been dropping. This is a sign of a quality of a company actually decreasing. This is not a good look when you see the PB ratio of a company going down through time. And I think the market, so when you see the valuation metrics, say PE ratio increasing through time, that's margin expansion. So the market is more and more willing to pay a premium for this company. For Bank of Queensland, because the PB ratio has been decreasing, the market is less and less willing to pay any sort of premium. In fact, they want to buy this company at a discount. And possibly now is a time to become interested in Bank of Queensland. That's with me not even having a look at the results. I'll leave that for another day. Redbubble, Bank of Queensland. Who do we have next? Selfwealth. What happened with Selfwealth? Oh, I remember now. Share price increased 25% on Friday. Something really good happened. What happened? Media speculation. That's what happened. ASX announcement response to media speculation. This was some sort of speculation of a takeover of the company. Media speculation regarding a potential transaction with Steak Shop. And the price for this takeover, 17.5 cents. Where did the share price finish at the day? 17 cents. Look at that weekly. Actually, that's a weekly. That's a monthly chart. Weekly chart. Share price of this company has been a downtrend. This is not a breakout. And this is just opportunistic potential takeover because I do think there might be some value in this company and a market cap of 33 million. And this is not a breakout. You can see the share price finish right in this red zone, which is the longer term moving average. And that has tended to be a resistance zone for this company quite consistently over the past few years. When the share price gets into that zone or just above that zone, you see the share price pull back. I wouldn't be surprised to see share price pull back, but it does look like potentially around 14 cents is a nice little important zone, support zone, which goes all the way back to June 2022. Share price hit 14 cents in June 2022, hit 14 cents in June of this year. And every single time the share price gets to 14 cents, we see share price rally like it did on the 13th, or Black Friday, the 13th of October. Resolute. Ooh, yes. Sometimes I don't look at announcements after close of trading. But on Friday, 13th, I did. And Resolute Mining released an announcement after trading had finished for the day. At 5:59 p.m., Group 3-year forecast and update to 2023 guidance. So straight away I went, this might be negative. They waited to the end of trading to release a negative announcement, hoping on Friday, people forget about this over the weekend. You want to release a good announcement before trading begins. And let's have a look to see if I'm right. Well, I already know I'm right because it was a downgrade, and that's not a surprise. So, see if I can remember where this downgrade is. So, a lot of talking about over the next few years, 2024, 2025, and then finally in the fourth paragraph. Yeah, fourth paragraph, we actually get to the downgrade, and I talk about why there's a downgrade. And finally, in the last line of the fourth paragraph, this has resulted in overall gold production being revised down from our target of 350,000 ounces to a range of 330,000 to 340,000. So a small downgrade, but it's still a downgrade. And we can see why this company released it after trading had finished, because it's not positive. A downgrade is always negative. Now, the rest of the announcement might be positive. Talk about 2024, 2025, increased profitability with production between 130,000, 140,000, blah, blah, blah. But this was a downgrade. So it's going to be really interesting to see how the market responds on Monday. And then it also depends on gold prices. If gold prices rally 10%, Resolute Mining might be up on the day. And the last company I want to talk about is Air New Zealand. And the reason I want to talk about, I almost forgot this company. But they did release an announcement, another update. All this is half-year earnings guidance. So on the 12th, which is the Thursday, Air New Zealand provides half-year earnings guidance for financial year 24. Let's have a look at the share price reaction. Down 2.96%. Now, the chart's really interesting. I'll talk about the chart in a second. Now, this was sort of a negative announcement. Yeah, I did have a look at it. It's negative. Not completely negative, but it is negative. Here we go, in the fourth paragraph, in the context of the above factors and assuming an average jet fuel price of $110 per barrel. So companies like this have to make a lot of assumptions whenever they're giving guidance, which is a fool's game, in my opinion. Anyway, assuming jet fuel price is $110 per barrel, United States dollars, for the remainder of the first half, the airline currently expects earnings before taxation for the first half of the financial year to be between 180 to 230 million. Is that a downgrade? I think it's just guidance. Anyway, I think the main reason I want to talk about Air New Zealand is if you look at the chart, you can see the share price just going sideways from November of last year all the way through to August of this year, just going sideways, a long consolidation period. And just before the 7th of September, the share price rallied. In fact, the share price went from about 70 cents all the way up to 76 cents. So what happened there? Dividends, dividend chasers. So let's have a look at the dividends of this company. This company went ex-dividend on the 7th of September. I can tell you right now. There it is, ex-div date, the 7th of September 2023. Dividend yield of 3.2%. Why would we be chasing 3.2% dividend yield? But that's exactly what happened. That's why the share price rallied leading up to the ex-div date, and then the share price fell 7.2%, significantly more than the dividend fell 5.5 cents. So the dividend was, what was it? Oh, no, it was 5.5 cents. There we go. It was 5.5 cents. So the share price did fall 5.5 cents, but the share price has kept on falling. I think this is ridiculous. Dividend chasers are silly because you bought at a higher price and then you get the dividend and the share price, unless you sold right on open, the share price has fallen. So you've actually made a loss. Even though you've got that income because of dividends, your capital has gone down a fair bit. Dividend chasing is ridiculous because in the end, you're going to lose money because a lot of you think you've got this capital, you've got this capital, and people think dividends is free. Dividends aren't free. As you can see by Air New Zealand share price, it fell 5.5 cents, which was a dividend. So dividends aren't free. You can't look at dividends as being free. It's a very important point. I never chase dividends. I don't care about dividend yields. It's just a nice little added benefit of holding a company. And my main thing is I want to see dividends grow through time because that's the way you can grow your wealth, is by having a company that can grow their revenue, their profit, can grow their share price and the dividends through time. Companies like the banks can't do that. And I've seen this time and time again when share prices have rallied before they've gone ex-dividend, and then their share price falls by more than the dividend. It's absolutely silly. These people will eventually lose all their money if they keep doing that sort of thing, dividend chasing. That's just my opinion. I could be wrong. Maybe you have a different opinion than mine, and I'd love to hear your different opinion. Why is dividend chasing really good? I'd like to hear a different opinion. Anyway, that's all I've got on this video today. Fairly long video. If you have any questions about any companies I featured in today's video, just leave your questions, your thoughts. If you think I'm stupid when it comes to dividend chasing, I'd love to hear you. So speak up and leave your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.